This day, the bulls started the trading week on a fairly positive note. So a burst of strength in the last hour saw the Nifty and the Sensex end 0.25% in the green. It seemed to be a mixed picture for the broader market. So mid-caps underperformed the benchmarks to end 0.25% in the red. However, the banks outperformed to end over 0.5% higher. Surbhi Upadhyay is here with the details of today's trading action. Surbhi, the bulls took off from last week's momentum clearly.
Well, it was an interesting reversal this Monday afternoon on the street. We had a sluggish sort of a mid-session, and then suddenly there was a burst of buying in the last half an hour. Perhaps you can attribute it to some excitement in banks, because the moment that news came in on the Essar Steel resolution, stocks like ICICI Bank and State Bank of India started rising higher. But it wasn't just about them. Essentially, the FII-driven momentum is very much intact in this market. Let me talk about stocks. So as I said, it's really banks sizzling all the way. You know, name any stock on the private sector side, from large market capitalization to mid. Today, for instance, it was Axis Bank, Kotak Mahindra Bank, State Bank, as I mentioned, even HDFC Bank. Lots of these stocks moving high in the last 1 hour of trade. But it wasn't only a banking party. You had lots of other participation from the likes of Reliance Industries. Very strong moves, and that really took the market along with it. IOC and HPCL, some of the oil marketing companies, started to rise the moment there was an intraday drop in crude oil prices. Stellar gains in the month of March on these stocks, and that simply continued today. Bajaj Finance was on the upswing as well. There was buying in the likes of an ITC. Some of the steel stocks like JSW and Tata Steel were quite excited as well. So what didn't work today? The IT's part of the market definitely seeing profit taking. Huge surge, and 1% rise in the rupee while we were trading today. So the profit taking really was evident on names like TCS, Infosys, Pro, Tech Mahindra. Pretty much the back, and autos are definitely in a slow lane. Now we're getting reports about the possible production cuts at a company like Maruti. Of course, the company didn't confirm it directly with us, but nonetheless, it really was weighing on sentiment. So Maruti, Eicher Motors, Hero Motor, most of these stocks were on the downside. In fact, even if you look at the mid-cap space, let's come to the broader markets now. It was a day of profit taking in mid-caps, and some of these auto names like Bharat Forge, like Ashok Leyland, these were stocks on the way down today. Arvind was also losing some ground. Vodafone Idea, where there's a ratings downgrade, again a 5% cut coming in there. And Lupin's troubles with the US FDA simply continue. It's 2 plants under question now, and that stock was down 4 to 5%. However, as I said, all was not lost. There is a lot of latent momentum in the market, and that's evident even in the mid-caps arena. Look at stocks like Jubilant Foodworks or PVR, consumer names that saw some good brisk buying today. And real estate, by the way, is a hot zone. India finally gets its first REIT after such a long wait. I know I've been covering this for more than 10 years, and that really led to a bit of a party in stocks like Prestige Estates and even something like Brigade Enterprises. So all in all, bulls in control.
Okay, that's music to the ears of the market. Bulls seem to be in control right now. Thanks, Surbhi, for taking us through that. Now, let's get you the big court story that we have been tracking very, very closely. This is the Essar Steel insolvency saga in a major victory for ArcelorMittal. The NCLAT has granted conditional approval for implementation of Arcelor's 42,000 crore rupees resolution plan. ArcelorMittal has been asked to deposit the amount with the Committee of Creditors. However, the Appellate Tribunal has listed 3 key issues that remain to be resolved and has said that implementation of the Arcelor resolution will be subject to final orders on these very issues. Ashmit Kumar is here with the details. Ashmit, you were in the court today. Take us through the fine print of the order.
Well, the big takeaway, of course, is that as far as Arcelor is concerned, comes in as a huge victory. Keep in mind that at the previous hearing, the NCLAT had refused to stay the Arcelor bid. Today, the next logical step has been taken. The NCLAT clearly providing that it is comfortable with the Arcelor bid, and with that, it has issued directions for ensuring that the Arcelor bid is implemented. It has issued directions toward that extent that the NCLAT will in fact work in compliance with the IBC, in compliance with the laws of the land, and will ensure that the Arcelor bid is implemented. Keep in mind that 42,000 crore rupee bid that was in question, that question at least in principle appears to have been settled now. The NCLAT also directing Arcelor to come forward and to make that payment and to make that deposit of the upfront payment of 42,000 crore rupees with the monitoring committee. And it has in fact in principle also provided for a nod for distribution of these funds between the lenders and the claimants. So that is one key step that has been in fact taken by the NCLAT. Now going forward, there are two aspects to watch out for. Number one is a caveat that the NCLAT has slipped in, that this nod that has been given as far as the Arcelor bid is concerned will be subject to final orders of the NCLAT. So that's more a matter of procedure, more a matter of formality that we do need to keep in mind. The other is that as far as distribution is concerned, the NCLAT has in fact observed as a part of today's proceedings that while it may be comfortable with the Arcelor bid of 42,000 crore rupees, it is however going to raise questions about how this money will be distributed amongst the various claimants, amongst the various creditors, and that is where the question comes in. What about the claims of Stand Chart? What about the claims of operational creditors who are claiming dues of over 1 crore rupees? So those are questions which need to be decided going forward. But for now, big victory coming in principle approval coming in, conditional nod coming in for the Arcelor bid of 42,000 crore rupees for Essar Steel.
So the questions, of course, still remaining there. But hang on, Ashmit, the clock seems to be ticking for Arcom on the owner of the company, Ambani. Ambani has less than 24 hours left to repay over 450 crore rupees to telecom vendor Ericsson or face a jail term. Reliance Communications, in fact, was relying on its income tax refunds worth 260 crore rupees. But in a setback, the National Company Law Appellate Tribunal refused to direct bankers to release the funds. Now, sources tell us that Reliance Communications has decided to not challenge the NCLAT order and will arrange for funds from other sources. Ashmit Kumar is still with us. Ashmit, what is the alternative for Arcom then?
Well, what's interesting is that February 20th, when the Apex Court had directed for payment of 571 crore rupees to be specific, of that only 118 had been made. The balance figure, of course, is 443 crore rupees that they needed to pay up. And the picture they had presented before the NCLAT is that it is urgent to get their hands on this 260 crore rupees of the income tax refunds, that it was urgent to get a hold of these funds to go ahead and to make that payment, and that it was the Apex Court direction which in fact would then bind SBI into releasing those funds of 260 crore rupees. However, what we now learn, as we learned in fact on Friday, that the NCLAT just did not see eye to eye with Arcom. NCLAT had in fact refused and rejected Arcom's application for refunding that money of 260 crore rupees of income tax refunds. Subsequent to that, the next port of call for an Arcom would have been to go ahead and to challenge that before the Apex Court. However, we learn from sources that they have decided against it. They have decided to accept the NCLAT order. What we are picking up is that they are confident of in fact raising these funds from other sources which they haven't disclosed to us yet. However, they are confident of meeting that deadline. Keep in mind that the Supreme Court appointed deadline runs out tomorrow on March 29th. If they don't make that payment, Anil Ambani could potentially be looking at a jail term. So in response to that, what we're picking up is that they're quite confident of raising the required amount of money, that's 450 crore rupees, and will be doing so by tomorrow. So that's at least a word of confidence coming in. But whether or not they choose to make so, whether or not they make good on that promise, tomorrow is the deadline, and we'll discover whether or not going forward if they do come across on that payment of 571 crore rupees to Ericsson. Back to you.
Okay, Ashmit, thanks for that. On to the latest on Jet Airways resolution plan. Sources say that Jet Airways has not yet reached an agreement with Etihad Airways over terms of the Memorandum of Understanding, which was drafted earlier this month. Ritu Singh, our in-house insolvency expert, is here with the details. Ritu, why the delay now? And there is, of course, a critical meeting today. So are we expecting some kind of a resolution in this meeting?
Well, you know, Naresh Goyal's self-imposed deadline to give his employees some sort of, update on the resolution plan that ends today. But this comes amidst a lot of tensions where Jet has now announced that it has, grounded or rather stopped its flights to Abu Dhabi, which, remember, is the base for Etihad Airways, clearly signaling all is not well between these two stakeholders of Jet Airways, that is Naresh Goyal and Etihad Airways. We're given to understand that there is no agreement yet on the broad contours of the Memorandum of Understanding, without which Etihad is unwilling to infuse any capital at all into Jet Airways. Do remember, on the 8th of March, Naresh Goyal had written to Tony Douglas, who is the CEO of Etihad Airways, to infuse 750 crore rupees by this week as emergency funding. But even that, we understand, Etihad is unwilling to extend. The key sore points between the two parties are this. One, of course, is the board position, where Naresh Goyal wants two of his nominees to remain on the board, whereas Etihad wants him out completely, or at the very least have only one seat. Second is the perpetuity clause of Naresh Goyal's stake being capped at 22%. Now, Naresh Goyal obviously wants it removed, but Etihad insists that Goyal's stake must be capped at 22% at all times, and that is something that it is not willing to compromise on. So these and many other issues remain, and before these getting resolved, there's unlikely that any of the two parties will infuse further funds, which means without Etihad and Naresh Goyal putting in money, even the lenders are not going to extend any further loans. So it is not looking very good for Jet Airways at this point of time. But Tony Douglas is in a meeting with the State Bank of India chairman as we speak, and we're hopeful there will be some update by the end of the day, as Naresh Goyal had promised.
Well, the employees definitely need it, and if the company has to stay in the air, it has to get some kind of resolution today or some clarity on a timeline at least. Thanks, Ritu, for taking us through that. We'll keep having Ritu back to give us updates on that critical meeting. But Tier IT tech company remains our top focus this evening. The L&T management is meeting as we speak, and we learn that the conglomerate is all set to announce the acquisition of 20.4% stake or 24.4% stake held by CCD founder VG Siddhartha and two CCD affiliates in Mindtree, including other investors. Further, we learned that L&T is going to make an open offer to hike their stake to 51%. This even as Mindtree co-founder KK Natarajan shot off a letter to L&T warning them against a hostile takeover. Mukta Warrior and Nisha Poddar are here with the details. Mukta, coming to you first, you had reported that the deal is likely to be announced today. L&T clearly gearing up for what could be the first hostile takeover in Indian IT. What are the contours and the fine print of this deal?
Yes, you're right. The deal will be announced anytime now. Remember, Siddhartha is in Mumbai to meet the L&T management, and the deal is being signed, and we can expect an announcement anytime now. The deal entails that L&T will buy the entire 20.4% stake that VG Siddhartha and his CCD entities hold in Mindtree for rupees 981 per share, which would value the stake just about rupees 3,000 crore. And what we also understand is that L&T will also go for a voluntary open offer to take its entire stake in Mindtree to over 51%. And we also understand there are some other minority shareholders who may be selling to, maybe selling about 3 to 4% to L&T as well. Now, as you said, the Mindtree promoters have been resisting this hostile takeover, as they've called it, and they've written a letter to the L&T board over the weekend in which, they have said that this deal would be value destructive for the company, and even revealed that they had asked the company to stop pursuing Mindtree as a target. And remember, Mindtree is also called for a board meeting on Wednesday to, have a share buyback, but it remains to be seen how that goes through, because L&T is going to make an announcement of the acquisition of Siddhartha's stake in Mindtree today.
Okay, Mukta, thanks for taking us through the contours. But Nisha, coming to you now, why did VG Siddhartha and L&T decide to advance the deal announcement? And also, we're given to understand that the 4 remaining founders of Mindtree are planning a buyback of shares to thwart L&T's hostile bid. What are your sources telling you with respect to how that is panning out? Because it's a very tiny amount and not really a defense enough.
So this is a big hostile takeover game that is really playing out in the IT sector, in fact, for the first time, and there will be attacks and counterattacks. So in pursuit to protect its turf, Mindtree promoters had announced that they would look at a buyback option that could have increased the price of the acquisition and would have made it a little less lucrative in terms of the acquisition for L&T. So it was a kind of a roadblock. But what L&T has really resorted to is preponing the deal so that any capital structure change after a public announcement of an open offer, as per SEBI guidelines, will require a 75% shareholders nod through a special resolution, which means that going ahead with a buyback plan would become extremely difficult, because VG Siddhartha and Cafe Coffee Day together own about 20% stake, and to get full 75% out of the rest would be very, very difficult. So at this point, we do gather that there is attack and counter-attack. One cannot rule out Mindtree promoters, who have right now 13% stake only, and therefore they are in the middle of a hostile takeover, coming up with more options so that they protect their turf from this hostile takeover.
Okay, fair enough. We'll leave it at that. Ladies, we'll of course have the details very soon now, but let's move on to another prospective story from Deal Street. We learned from sources that Aegis Insurance has expressed interest in buying an additional 23% stake in IDBI Federal Life Insurance from IDBI Bank. It is in fact in talks with other Indian banks to buy out IDBI Bank's remaining 25% as well. Remember, IDBI Bank holds 48% stake in IDBI Federal Life Insurance. Yash Jain is here with all the details. Yash, first explain the entire shareholding construct to us, and where have the talks reached so far?
Okay, to start with, of course, the management of the IDBI Bank had made it very clear that they would look to conclude this transaction involving the sale of 48% stake which is held by the bank in IDBI Federal Life Insurance by September 30th. Now, as far as this particular timeline is concerned, the discussions we are given to understand is that the foreign partner in IDBI Federal Life Insurance, that is Aegis Insurance, has expressed the intention to raise its stake in IDBI Federal Life by buying another 23% and taking its total stake to 49%. Now, do remember, 49% is very important because that's the FDI limit to which the foreign partner can go to, and it wants to go full scale as far as that foreign FDI restriction is concerned. Now, of course, IDBI Bank has made it very clear that it wants to dilute entire 48%, and so that the transaction goes through, Aegis Insurance is also in talks and also, looking to make an arrangement whereby it's talking with a few private banks in terms of if they can buy the balance 25% from IDBI Bank, only so that this particular transaction can go through. A private bank can come in buying that 25% stake, and Aegis can raise its stake by 23%, taking it to 49%. As far as the valuations are concerned, what we are given to understand is that IDBI Bank may raise anywhere about 1200 to 1400 crore for its 48% stake, valuing the life insurance arm at about 2500 to 3000 crore. This is one part of the story, but also what we are given to understand is that IDBI Bank has also started exploring options when it comes to merging IDBI Asset Management Company into LIC Mutual Fund. Of course, this big move will come after that very important decision of LIC buying majority 51% stake in IDBI Bank. Just to give a context of these two companies, IDBI LIC Mutual Fund has an AUM of about 11,000 crore rupees, whereas IDBI Bank has about 18,000 crore rupees. These figures are as on December 31st. So, of course, fairly big two entities merging together after that decision of IDBI Bank buying 51% stake in LIC.
Okay, Yash, we'll leave it at that. Thanks for joining in with that. 108 economists released a letter raising concerns about India's data integrity and stressed on the need for transparency in government data. Today, 131 chartered accountants have released a counter letter calling the concerns of the economists choreographed and politically motivated. They say the move is reminiscent of the award Vapsi drama from a few years ago. Regarding the economists' concerns about the revisions in GDP data due to the change in base year, the CA's letter says, and I quote, base year changes are made to ensure that data reflects the transition as well as the disruption in an economy, end of quote. The prominent signatories to that letter include TV Mohandas Pai, Vallabh Bansali, Nirmal Jain, Nilesh Shah and others. Now, four-time Goa Chief Minister and former Defence Minister Manohar Parrikar died last evening after battling pancreatic cancer for over a year. He had the distinction of being the first IITian to become the Chief Minister of a state. Following his death, the centre announced a day of national mourning. His mortal remains, wrapped with the Indian flag, are at the Kala Academy in Panaji so that the public can pay their last respects. His cremation will take place, full state honours, at 5 p.m. at the Miramar Beach. Prime Minister Narendra Modi paid last respects to Manohar Parrikar at the Kala Academy. Union Ministers Rajnath Singh and Nirmala Sitharaman and BJP President Amit Shah will be attending the funeral. And with that, it's time to wrap up this edition of After the Bell. Stay tuned to CNBC-TV18. Markets Today Talkback will take the action forward.